Sergio Ermotti is in his second stint as CEO of UBS, Switzerland's largest bank and Europe's largest wealth manager. In 2023, he was brought back just weeks after UBS agreed to rescue Credit Suisse from the brink of collapse. Since then, he's been integrating Credit Suisse, and more recently, he has found himself in a standoff with the Swiss authorities. Sergio, before we get into the nitty-gritty of capital requirements, let's talk about you. How did you get into banking?
Well, actually, when I was 15, I wanted to be a football player, and my plan B was the fact of, eventually, if I wouldn't be a professional football player, to be a sport teacher.
But every 15-year-old wants to be a football player.
So
were you very, very good?
I was good, but at the end, not so good.
And you haven't done too badly for yourself. You're a kind of stabilizer in chief. Do you think of yourself as someone who's sort of brought in to stabilize institutions after crises?
It's interesting because when I go back into my career, until I was around 40, my mandate was always to grow businesses, create new businesses. After a couple of years, the financial crisis comes, it was all about restructuring, and then at UBS eventually.
Now we get into the nitty-gritty of banking. So the integration of Credit Suisse has gone pretty well.
Yeah.
But what surprised you the most?
When we started the journey, we had a clear view on what should be done. We have been migrating 110 petabytes of data, so it's like watching a movie for 275 years in a row, and still serving clients, because clients had a little bit of sympathy for our challenge for a couple of weeks, but then they want to be served. I was surprised that we did it so
You were surprised
quickly.
at the speed you were able to do it.
The speed and the quality on how our people focus on doing both at the same time. But the biggest positive surprise, in my point of view, was at the end of the day, are not numbers. It's not the KPIs or financials. Is the cultural integration. Back in 2022, at the end of 2022, Credit Suisse colleagues back then would only reference Credit Suisse as a employer of choice by a factor of 55%. Mm-hmm. At the end of 2024, it was already 70%. At the end of 2025 was 81%. Industry norm is 75%. So the fact that we managed to do this integration successfully is also the fact that the culture did come together much quicker than anybody expected.
I think that is quite surprising. But what did you think was the most damaging issue with Credit Suisse?
Clearly, a business model that was not sustainable. But when a bank starts to lose money fairly regularly and has reputational issues, then it becomes a very risky and dangerous cocktail. So both the management board and shareholders, they are the ones who bear the vast majority of the responsibilities, because, of course, they should have acted more decisively. Regulatory concessions were done to Credit Suisse for too long, and actually in a way that created a further problem. And lastly, I would say that with hindsight, clients and regulators and the stakeholders in general didn't watch the market. The market was telling the story already a few years before it happened. So the lessons learned is going to
No one was really surprised that the bank got in trouble.
Exactly. You have a very fragile situation that seems to be under control until an external factor, like the Silicon Valley Bank and the regional bank, created an infection.
Yeah. So you've got a combined headcount now of about 100,000, and you are supposed to bring it down to 85,000. Is that still your plan?
We are not commenting on numbers, but of course we started the journey with a combined headcount with 157,000. We are right now at 117,000. Of course, we know that there is still a little bit of work. That the most painful part of this integration is clearly when you have to go through these redundancies. Yeah. But I hope this is going to be done by the beginning of next year.
And do you think that are there specific areas that you may want to get out of still, or that you may want to target?
Until last March, we were in Switzerland. We were still operating with two banks. I mean, we had vis-a-vis the client was UBS, but behind was Credit Suisse and UBS. Infrastructure, IT, some real estate footprint, and some workforces reduction.
When you came back in 2023, you had committed to staying 3 to 5 years as a CEO, and you had a specific job to do, which was the integration. So when are you planning to leave?
I'm on year 3, so I think that's...
So you're staying for the 5?
No, look, I think that's now our chairman has clarified this matter because, we...
He has?
At the last AGM, he basically said that I'm going to stay as long as is needed, and, we still have a couple of issues to resolve when I'm leaving.
But is it still 3 to 5?
Well, we're not going to put any time frame, and
okay. So it may not be 3 to 5; it may be 6. But you still see your job as, I came in for the integration, and I didn't come in for the longer term.
Like in my first stint, was not only about rationalizing, integrating, but also preparing the bank for the future. Right now, we have a lot of initiatives going on in terms of AI, technology deployment. Remember that one of the costs of the integration was that we had to slow down a lot of changes and integration.
You were at
because in order to absorb such a transfer of data, clients, and so on, you can't make a lot of changes to your infrastructure. So right now we need to catch up. We are already investing, and we are quite well positioned, to be fair, but we need to go even faster.
Let's talk about this rather significant problem that you have right now. Explain to our viewers the standoff with the authorities and why you oppose the regulatory reforms that they are trying to impose.
No, first of all, let me point out that we don't oppose the concept of doing a post-mortem and also make changes to the regulatory framework that takes in account the lessons learned from what happened at Credit Suisse.
You just think that what they're requiring you to do.
Exactly. They are not proportionate, they are not targeted, they are not internationally aligned, and they do not recognize a big chunk of the root causes for why Credit Suisse went down. I mean, still...
for you, they're trying to overcompensate.
They are avoiding the fact that the current regulation in Switzerland, when fully applied, allowed UBS to take over Credit Suisse and stabilize a global systemic important bank within 5 months, returning all the liquidity support that Credit Suisse got during the crisis and the guarantees that...
So your argument is that the regulatory framework actually worked?
Well, the regulatory framework is good, but you have to apply it. And so I don't see the reason why you should impose a speed limit to all drivers in the country, or in that case to UBS, because one was basically driving well above the speed limits and was authorized by the authorities to go above the speed limits. We agree that things have to be done, but they have to be done in a proportionate way that allows UBS to continue to be...
So they're now saying you need $20 billion in extra capital. What is the figure that you find more acceptable?
Obviously, I'm not going to comment on figures. There are different ways to get to the right solution. Discretion for the bank and for the authorities to use concession or grant concession has to be eliminated. A more prudent way to look at certain valuation of the assets has to be put in place. But, the numbers are quite clear. So we can't have a requirement that is 50% higher than our peers.
The issue is now in Parliament. Are you hopeful that there'll be a further dilution?
I like your description.
You'll end up...
Your description, hopeful, is a good way to... I'm hopeful.
You are.
And I'm glad that there is now a democratic process that goes through and look at the matter. Not only banks, cantons, authorities, trade association, everybody's very concerned about what's going on. We are not in a negotiation. right? So we have to accept what's coming out of this.
Yeah, yeah.
But what we want to do is to ensure that decisions are taken based on facts.
Of course, you will have to accept, but that doesn't mean that there won't be consequences. Can you rule out that UBS would move its headquarters out of Switzerland?
You know, our focus right now is to ensure that UBS can continue to operate out of Switzerland as a successful bank that contributes not only create values to clients and shareholders, but also contributes to the well-being of Switzerland and its financial center. We are not even thinking about another option. We need to put our efforts.
Well, we've been told that you are thinking about another option, and that the option of changing headquarters has been discussed internally.
But everybody's raising these options because you mentioned it yourself.
Yeah.
What are the consequences of this? So, and of course, it's a fiduciary duty of the board of directors and management to examine any potential options. But we are not spending time in over-engineering that topic because the biggest priority by far...
Surely you need to have contingency planning. Your shareholders would be requiring you to have some contingency.
But how can you have a contingency plan if you don't know what is exactly the outcome? It's not like overnight.
You have two outcomes, right?
No, but Roula, things are not going to change overnight in any case. So it's not, the bank is very profitable, it's very solid, it's fulfilling all its requirements. So there is no urgency to go into that debate.
But that's just like good banking, good management for you to consider contingency plans.
It's how much time you spend on it.
I'm less interested in how much time you spend on it, but more interested in what it is.
But it's not a priority for us today because we know that we benefit from the Swissness and Switzerland benefits from us. So this is a winning combination.
You don't think you've become too big for Switzerland?
Look, I mean, I hear that argument all the time. And then you look at numbers. We are number 130 plus in terms of size of the country, number 100 in terms of population, but we are the 20th largest economy in the world. UBS is the 20th largest bank in the world. We are a country that has created, a lot of wealth. And therefore, what is wrong to have the 20th largest bank in the world being aligned with the 20th largest economy in the world?
Do you see the standoff on regulation as part of a broader problem in Europe?
If it would be over-regulation only in banking, one could probably live with it. We have over-regulation across the board. That's the real problem. The amount of bureaucracy, lack of innovation that goes on is a fact. Is not.
Are you surprised that more than a year after the Draghi report, very little has actually been accomplished? Very little has changed.
No, I'm not surprised. Unfortunately, I'm not surprised. Things are not good. The data, economic data, are showing a clear divergence between productivity compared to the US, compared to Asia, a declining, no growth in Europe. But things are bad, but not bad enough to take actions. So there is no yet real pressure to take actions because at the end of the day...
What is it going to take?
Probably, unfortunately, it takes things to get worse before they can get better. A good example of restructuring is Greece. Greece needed to go through a very profound and painful crisis for the country, for its citizens, and almost like for its reputation. And now it's one of the best performing economies in Europe. As long as you have governments promising that they can fix issues with higher taxes, more debt, and more fiscal stimulus, regardless of the fact that we have already a high level of indebtedness in the system, no politicians will be elected by asking people to make sacrifices.
You reported an 80% jump in profits in the first quarter. Do you worry that could make the debate about capital requirements worse for you?
When you look at the normalized, very strong quarter, but not as strong as an 80% on a reported basis. So, but coming back to our profitability is now measured in terms of return on capital deployed. We are getting closer, not yet, at the level UBS had in 2022. So, and having a profitable bank is the best things you can have to ensure resilience. And in a sense, a bank that is able to pay its cost of capital while serving the economy and clients is very important. No, I don't think that is going to be, actually should give confidence to politicians that a strong bank, by the way, a strong bank that makes profit pay taxes. So people always talk about the duty of protecting the taxpayer. Of course, we want to protect the taxpayers. I'm the first one who wants to do that. But also look at the taxpayer as on the two sides, not only the risk they take, but also what they get. UBS pays 2.5 billion of taxes. Its employees and UBS pays 2.5 billion of taxes in Switzerland every year. So it's very important to keep the bank profitable and a bank that grows in order to balance these risk rewards dimensions.
Do you feel that there is a lot of complacency in markets, even among large corporates, about the war in Iran and this assumption that everything's going to be fine? It's just a matter, like by July, everything, and perhaps it will, but perhaps it won't.
If you look at the level, there is a high degree of complacency in financial markets, even before the Middle East crisis, to be honest. I mean, if you look at valuation, despite everything that goes on. But nowadays, I fully agree that hopefully and most likely in the next few months, we're going to find a resolution to this matter. But the digesting what happened is going to take a lot of time. If you look at, already today, the inflationary consequences on the energy is huge. But think about all the Gulf
and frankly, the inflationary consequences will also have political consequences.
Exactly. And on consumer spending, we're going to see in the next couple of months, I expect consumers starting to reflect this inflation into their consumer habits. So we'll see exactly how it plays out. But if you go back to the Gulf countries, I'm totally convinced that, they're going to recover, they're going to be good, and it's going to be one pause in their journey of structural growth. Having said that, think about what they're going to need to do in terms of rebuilding infrastructure, redirecting investments in different areas that they were...
A lot more towards defense, presumably.
Absolutely. I mean, the lessons learned for them is going to be probably they will need to invest less abroad and more in their own infrastructure and defense.
Are you hearing that from clients already? Because you have a lot of clients in the Middle East.
I mean, to be honest, clients are quite stable. Domestic clients are quite convinced, and rightly so, of the future. I mean, the long-term trends of but this is not what clients themselves control. It's governments.
Yeah.
The fiscal spending will be towards rebuilding infrastructure and rebuilding resilience, not only in energy supply chains, but also in defense.
Spending more domestically than outside.
Exactly.
Have you seen clients moving assets? Do you see any patterns?
No. I think this is, by the way, maybe because the Middle East, we saw a lot of people moving to the Middle East and developing business in the Middle East. Some of them have slowed down their probably short-term plans, and some others are coming out because of fears, mainly people with families. But eventually, you haven't seen a lot of flows moving out of the region.
And finally, the big risk that everyone is concerned about, Andrew Bailey wrote in the FT about this yesterday, and we had the HSBC case, is private credit and the extent to which banks have an exposure, even if it's not a direct exposure. How worried are you about that? And are you sort of confident that you don't have similar cases at UBS?
Well, look, you always need to be concerned when you see a segment of the financial sector growing so fast. I mean, we have been quite challenging around. First of all, private credit is part of the package of how you can help mobilizing capital and finding the best and most efficient way to serve clients and the economy. But the growth of private credit was very exponential over the last few years. And when you have that kind of growth, of course, you're going to have some excesses, right? And this is probably what's coming out. UBS, we have 0.5% of our balance sheet related to private credit, with around 50% loan to value, 60% with investment grade. So the issue is always, what is your first direct exposure, and what are
your indirect
and indirect exposure to the financial system, right? So the second order effect of what's going on needs to be watched. Now, I don't think it's structural. It's by far not going to be a kind of...
It's not a systemic risk.
It could be systemic, but contained in a way that it cannot be compared to what happened with housing in the financial crisis or with government debt default. But of course, the true issue is you're going to find out is suitability. Are the people that bought these assets aware of the fact that they were more risky or less liquid? And this is the real issue that will come up.
It's a due diligence issue.
And the transparency. Of course, private markets are by definition less transparent in terms of pricing, right? And valuations. So I think that the next real priorities for private credit is going to be much more transparent and in the way they assess their assets and the valuations.
Okay, so from what you're saying, I may still see you in more than 2 years.
I hope so, in any case.
Here we go. Okay, well, thank you very much for giving us this time, Sergio Ermotti.
Thank you.